Hi guys, I'm Dave, and today we're starting a series of videos that are going to be very interesting. Every single day I will be diligently doing a complete and thorough analysis of the Nasdaq futures market, and together we will endeavor to identify crucial areas of confluence for both the pre-market trading session and the actual market openings themselves. Also, only on this particular channel you'll receive the option zones completely free, again specifically for NQ, and will additionally be adding those for SP furthermore indeed. As you very well know, the 0 DTE, also widely known as option zones, are specific areas of significant interest where the broader futures market, which is now largely and predominantly driven by options, tends to predictably move either towards a put option or a call option, meaning either a long position or a short position in order to ultimately reach these designated zones. The calculations we perform will determine very precise zones where the largest, let's say, bets accumulate, areas the market will tend to target during the day. Here we are, guys. Let's get right into analyzing the Nasdaq pre-market. First, we'll map out all our confluences, and then at the end of the video, I'll give you the option zones, also known as 0 DTE. All right, let's get started. We're looking at a 4-hour chart. I've already marked a weekly fair value gap down here where, okay, the market could reach, but in any case, we'll keep it as our area of interest. I'm going to take this low and this high, which are the lows and highs from 2 weeks ago, and I'll label them as weekly liquidity. Why? Because last week, the one that just ended, we didn't take out either the upper or the lower one, so we're ranging within the short weekly candle from 2 weeks ago. The price, as long as it isn't accepted above here, is still short. We have a lot of areas of interest. The last one that the price needs to respect if or in case it wants to go short is this 4-hour BPR. So now let's mark it for H. Then something else quite interesting that we'll mark is also this inverter gap at this level. So let's write inverter gap for H. And as an analysis, I could say that if the price, and this is the last area for the short to hold, if that doesn't hold, we'll definitely go on to make new highs, okay? For now, I'm leaving behind this whole area, this whole structure, because it's not relevant to us right now, okay? Not much. Why doesn't it matter much to us? Because we have the option zones, and later I'll give you the number, the exact area, the precise figure regarding the daily movement. You know that in any case, the option zones are bets that the market makes with a daily expiration. The options market is 10 times bigger than the futures market, so you can understand that options are in control. The options will be our daily targets. What does that mean? It means that definitely one of these zones, if not more, will be hit 100%, okay? So for now, let's mark this BPR. During the upward move here, it also created a 4-hour fair value gap. Here as well, we created a 4-hour fair value gap, so we definitely need to mark it too. Let's move the chart to the 1-hour time frame. We have the daily liquidity here, but it doesn't really concern us because it definitely won't be taken. We have the daily low liquidity from Friday, which I'm going to mark because this is very important. And we can see that in this area, we have a double confluence with a 1-hour fair value gap where it hasn't been properly mitigated, so technically the price could come back to this level. Let's move straight to the 15-minute time frame and mark our areas of interest. We have the Asian one up there, then we have the Asian low that I take, this one here, sorry. This is not the Asian one, but I was wrong, this is the Asian one. It's okay, wait a minute, So this one here is Asian, then this one, I have to take this one, guys, as Asian, absolutely. So I'll take the Asian low at these levels, okay? As long as we're within the Asian session, the only thing I'm going to take is this 15-minute fair value gap. If the price finds resistance there, we could definitely go long, but let's take a closer look. Let's also carefully mark down the New York afternoon trading session, which would be precisely this one. It's a very significantly important liquidity area within the market. I call it 7:30 p.m. to 10 p.m. guys because I'm Italian, and even though I've set the times for New York, my analysis is still somewhat based on my own time zone. Anyway, 7:30 p.m. to 10 p.m. would still be the New York afternoon session where the price might tend to rebalance. We have a long structure with internal liquidity being taken, possibly to go long. So the areas of interest are definitely only while we're within the Asian session. Technically, I wouldn't try anything right now. If anything, I would wait for the price to go short in 3 zones to see the reaction. The first reaction I would wait for is at the Asian low, then the second reaction at the 4-hour fair value gap, and the third, which is the best and my favorite, would be in this area here, and then we could look to go long. As for the pre-market, the trades to consider are, we'll leave the short alone because it started without taking out the Asian high, so I don't know where it could stop. It's very risky to go short while we're still within the Asian session, but we could potentially take with the setups, which over time, guys, this is just the first video, I'll explain them to you. We could potentially take, if a setup appears, a long at the Asian low, a long at this 4-hour fair value gap if we logically reach this area, and as a last option, this area here. The price is now collapsing. The trade I definitely wouldn't take is a long when the price hasn't taken any kind of liquidity. So if the price starts from this fair value gap at 15, which is basically where we are now, since we're in pre-market, if the price starts from this area, I would absolutely leave the long alone. I wouldn't take it. Instead, I would look to go short, possibly from the Asian high, if logically it doesn't start now, but the price comes back up, grabs some liquidity, and then starts to drop. We can also take the short, taking a partial at the Asian level, a partial at the fair value gap at 4, or possibly a partial at the 4-hour fair value gap. Now, once we've thoroughly finished this rather important little part about our significant confluence zones, let's take a very careful look at the crucial option zones for today, which is indeed Monday, August the 11th. I've already meticulously marked them all out, but we will certainly go over them in much more extensive detail so you can precisely mark them on your very own trading chart as well. If you don't know what 0DTE zones are, go look them up, and I can tell you that on this channel you'll get them every day for free. These are complex calculations done at the London Open to determine the areas with the highest concentration of bets. Let's say where, how should I put it, there's a greater influx of winnings at these levels. So these are zones that the market will hit one or the other 100%, okay? If you're not convinced, watch this video, leave a like, a comment, and I'll see you tomorrow as we check which of these zones the market has hit. So now I will proceed to take the existing text and carefully mark the specific zones for you. These particular zones, I will provide you with a numerical value now, and this numerical value here, which defines the zone, is precisely 10 points above and 10 points below, okay? The first zone is 24,030, okay? So this is the central zone. The maximum will be 24,040. The minimum will be 24,020. Then let's take the second zone, which is 23,915 with the maximum at 23,925 and the minimum at 23,905. Next, let's take another one, the short options zone, also called the put, which is at 23,580. So the maximum is at 23,590 and the minimum at 23,570. Then we move on to the second option zone, also known as 0DTE or put, the second put, which is at 23,400. So we have the maximum at 23,410 and the minimum at 23,390. Looking at the chart and seeing what it's doing, well, logically as a reference area, also as far as the daily is concerned, definitely, guys, as you can see in this area, we have the liquidity during the New York afternoon. We have a 4-hour fair value gap. We have a 1-hour fair value gap to mitigate. And we also definitely have our option zone. So as far as today is concerned, going to reach this option zone and then possibly taking a long wouldn't be a bad idea at all. We're still in pre-market. The market can do whatever it wants. Remember the trades I mentioned to you. So if the price reacts at the Asian low, we can take the long or the 4-hour fair value gap or the 4-hour fair value gap with the New York afternoon liquidity down here. Okay? So you need to be very, very careful. It could also, in some specific and particular cases, potentially do a PO3. Okay? a PO3 long. Let's be careful. Even if the price is heading toward the first zone of options, it doesn't necessarily mean it will reach it. It could stop and then go after the one above. This is the first video I'm making for you. Please, if you like our content, guys, give us a follow and leave a comment. The channel has just been launched. I really truly hope I can be of help to you. See you tomorrow at the same time, and starting tomorrow we'll also analyze whether today's chart has hit one of the options zones, okay? So thank you for stopping by. A big hug from your David. Bye guys, see you tomorrow.